When an asset is trending heavily, it won't always pull back to the 50% to 61.8% Fibonacci area. Often, you'll only get shallow pullbacks and not deep pullbacks. Now, you don't want to miss out on trading with a heavily trending asset because that's where the big money is made. This is where the 38.2% Fibonacci level comes into play. You use it in two very specific scenarios. Scenario number 1, when the 38.2% Fibonacci level lines up with an area of confluence. So you have a clear moving uptrend through the higher highs and higher lows, and you want to trade with the trend. This here is your very high quality area of confluence because you have a key support level, trend line, and moving average that all crossed. This is also where the 38.2% Fibonacci level lines up perfectly, making this an even better area of confluence, as you are at an area where continuation traders are looking to add to their winning long positions. Remember that the 38.2% Fibonacci level is still a good pullback area, as it represents roughly a third of the way of your previous impulse move. This is very key. So you had candles with the wicks sticking out right at the high quality area of confluence, which shows a reaction. And once you had an intraday trend change confirmation, you would take a long entry. Let's show this again. You have a clear moving uptrend with heavy momentum as it breaks clearly through the key level. As price pulls back, you had an area of confluence here where the moving average, very high quality support level with multiple reversal points, and 38.2% Fibonacci level all crossed. Once price reaches the area, you had multiple candles with the wicks sticking out, showing a reaction. So you would either take a long trade after price broke above the falling wedge pattern, or for an earlier entry point, look for an intraday trend change inside of here. Let's show one more. You have a moving downtrend through the lower highs. Price then breaks below the key support level and below the descending triangle pattern, showing the bearish momentum, so you want to trade with it. Price then pulls back to your area of confluence, where the resistance level, moving average, and 38.2% Fib area lined up, which presented a short trade opportunity. Now, you then also had a second continuation entry down here, as you had a support turn to new resistance level, moving average that crossed, followed by the 50% Fib level lining up perfectly, which presented another short trade setup. Let's now go through a multi-time frame trade setup. Now, there were two trade setups we took on this asset. This here was the first trade setup, where the support level, backside of the trend line, right shoulder of the inverse head and shoulders pattern, and 38.2% Fib level all crossed. Now, our second trade entry took place right here, but on the lower intraday time frame, using the confirmed bullish and upwards directional bias from the first trade setup here. So let's pull up the lower intraday time frame and put it beside this one. On the left is the 30-minute time frame we just looked at, and on the right is the 5-minute time frame. This here, where the trade setup we just identified was, is this same area here on the lower 5-minute time frame. Now, your second entry point was right here, where the support level, trend line, and 50% Fib level all crossed, which presented another long trade setup. Let's now move on to the second scenario for when you would use the 38.2% Fib level. When you have a trigger event that occurs before a 38.2% Fibonacci retracement setup. So when you have a recent trigger event and trade setup close by to the left, this gives the asset you are trading a clear directional bias with heavy momentum and speed. This means that you often won't get a deep pullback to the 50% to 61.8% Fib area in these scenarios due to the heavy ongoing momentum. Now, you don't want to miss riding the wave of this heavily trending asset just because you aren't at a deep pullback area, as these heavily trending scenarios after a trigger event is where the big money is made. So what you do is you look for a continuation trade at the 38.2% Fibonacci shallow retracement level after you had the trigger event close by to the left. Let's show this on the charts. This double bottom trade setup here is your trigger event. Price then breaking through the trend line, breaking through resistance, breaking above the moving average, and making a higher high further shows how strong this fresh moving uptrend is. So in cases like this, where you have so much upwards momentum, you often won't get a deep pullback to the 50% to 61.8% Fib area. This here is where your area of confluence trade setup resides, because the key support level, moving average, and 38.2% Fibonacci level all lined up perfectly. As price reached the area, you had multiple candles with the wicks sticking out, showing a reaction. And once you had an intraday trend change confirmation, you would look for long entry points. Let's show this again. This double bottom trade setup here is your trigger event. Price then breaks above the descending triangle pattern and trend line, breaks through the key resistance level, and makes a higher high, which shows how strong this fresh moving uptrend is. This here is then where your area of confluence trade setup resides, because the very key support level with multiple reversal points, moving average, and 38.2% Fibonacci level all lined up perfectly. As price reached the area, you had multiple candles with the wicks sticking out, showing a reaction, and once you had an intraday trend change confirmation, you would look for long entry points. So, one more. So price breaks through the key level, breaks through the trend line, and makes a higher high, which shows how strong the upwards momentum is, so you want to trade with it. This here is your area of confluence trade setup, where you had multiple very long wick candles reacting to where the moving average, support level, backside of the trend line, and 38.2% fib level all crossed. Now this trade setup here then acts as your trigger event for your second trade setup here, where the new support level, trend line, and 38.2% fib level all crossed. You had a long wick candle and candle color change right at the area of confluence and presented a long continuation trade. Now, moving on to the next topic. Fibonacci extension levels can be used to identify trade exit points due to trend exhaustion and the big guys taking profit. In an uptrend, you have your impulse moves here and your corrective moves here. Grab your Fibonacci extension tool. Click at the start of the previous impulse move here. Drag it up and click again at the start of the corrective move. And then drag it down to the starting point of your current impulse move. Then drag it slightly to the right and click again. These are the Fibonacci extension levels we use. Now, a very important point. Different traders will choose to use different Fibonacci extension levels, which is perfectly fine. The ones we use work best as part of our overall strategy, but you should use whichever Fibonacci extension levels you find work best as part of your overall strategy. Fibonacci levels aren't an exact science, so you must use them in combination with price action to increase the quality of an already good trade entry or trade exit, and not on their own. So in the opposite direction, in a downtrend, you have your impulse moves here, and your corrective moves here. Grab your Fibonacci extension tool, click at the start of the previous impulse move here, drag it down and click again at the start of the corrective move, and then drag it up to the starting point of your current impulse move, then drag it slightly to the right and click again. And these are your Fib extension levels. So, starting with the 50% to 61.8% Fibonacci extension zone for trade exits. So, you went long at this key support level here, or through the breakout here. Price then starts to trend heavily upwards in your favor, and you start looking for possible exit points. But there is no resistance level in sight to target for an exit. So what you do is, you take your Fibonacci extension tool, click at the start of the previous impulse move here, drag it up, and then drag it down to the starting point of your current impulse move. You would then be watching the 50% to 61.8% Fibonacci extension area for price action to signal a possible trend change, which you got through the sideways chop, descending triangle pattern, followed by the break below the pattern. It's at this point when you would further trade manage or exit manage your position, which we cover in depth on our site. Now, what is the psychology behind why the 50% to 61.8% Fibonacci extension area is important? This fib zone represents a travel distance of roughly 50% or halfway of the previous impulse move, which is usually the first area where the big boys will look to take some profit, which can trigger a pullback or a reversal.